Canada Revenue Agency says that 788,000 Canadians applied for the CERB benefits when they were able to beginning yesterday. That's a number that, of course, will only increase as the application process opens up to more Canadians. Is it enough help? And is it the kind of stimulus that may help us on the other side of this global pandemic? Francis Donald is chief economist at Manulife Investment Management. Francis, great to have you with us. These are obviously questions we don't know the answer to, but when you hear numbers like this, that's just the first tranche, right? The first third of people, or quarter of people rather, who may ultimately apply. So let's assume that we can multiply that number by 4, and we're getting up close to 3 million. What does it say about the level of support the government is offering and whether it's enough?
Well, it says it's very much needed. And is it enough will depend on, frankly, the length of this crisis. When do we come out the other side? Because a lot of these policies, they're designed to bridge the gap between when we had to begin social isolation and when we can take that off. But their big unknown is when we're actually going to see social distancing come off and when we can recover the other side. And that length of the pain is really what's going to be the big determinant of whether or not we can bounce back in what many are calling a V-shaped recovery, or whether this is a multiple months to potential year type of crisis.
It feels as though a lot of the programs and the wage subsidy, which, really starting at 10% and then lifted to 75, but won't really roll out for 6 weeks for many businesses, plus this big proof of the 30% drop in sales. It feels as though the government, with all good intentions, wanted to keep the existing machinery moving as much as possible, keep people working for the people they're already working for, instead of sending them home and sending them a check. Do you think history will show that that was a mistake, that in the end we might get to the same place, which is government money going to people's hands, and doing it as directly as possible might have been the better way to go?
Well, the entire strategy of what we're trying to accomplish is something that's never been done before. We're trying to put our economy into hibernation, effectively press pause and say, we'll just unpress that pause button in a couple of months. The challenge is that over that period, there are companies where even if you're paying 75% of the wages, they cannot subsist off of the money that they've been given. So we are likely to see defaults rise. There are also businesses that are not likely to survive these 3 to 4 months and will not be rehiring. So you're probably going to see come 6 months a combination of these two needs. We talk a lot about mitigating strategies, which is what Canada has focused on, and recovery strategies, which is what the US is focused a little bit more on. We need some combination of both because, as you say, there will be people who are laid off who do not get their jobs back in 3 to 4 months. There are also people who we know if we give them some subsidies now, they can stay in place. So we have to focus on those two different types of policies, use them in combination.
Now, the one reason, of course, Francis, that governments keep their fiscal powder dry is because economies do hit contractionary periods. We do see recessions, and we need stimulus to help get us out of it. This is not that. To your point, this is hitting pause. This is just helping people get from A to B without drowning. When we get to the other side, are we going to need recession-level stimulus? In other words, a fresh dose of it in order to restart the economy? Or do you think, and this is a big unknown, but do you think there will just be enough pent-up demand in here that it'll happen on its own, consumer driven?
Well, one thing we're hearing a lot about, which actually is a very positive sense, is this concept of infrastructure. So if we have very low interest rates and we have people who need jobs, let's take the opportunity to address some of the structural problems that exist in our North American economies. Very low productivity levels, the need for new infrastructure programs. If we can do that, and we can do almost like, think of it like the New Deal, which we learned about in our textbooks back in high school, then we can actually have a combination of that recovery and improve our growth numbers over the long time. I mean, this is a government that has focused a lot on trying to improve outcomes on a structural basis. This will be the time, if there ever was one, where you're going to get the less or least amount of pushback on some of these longer term projects. But right now, these governments, they do need to start focusing a lot more on the mitigation strategies. It's all nice to talk about infrastructure spending. That will come, but that's not going to help us in the next 3 months. That's going to help us in the next 4 to 5 years as we rebuild these economies and tilt our economies to something that might look a little different than it did even 3 months ago.
So when would you say is the right time to start talking about things like deficits and government debt? Are we nowhere near that yet because we're still obviously putting out this particular fire?
Well, there are implications to growing levels of debt. So if you're thinking about bond yields or you're thinking about credit ratings and these types of things, it's probably not too early to think about it. But we always have to think about triaging. What are the most important components of the story right now? And I think you'll see very few economists who tell you now is not the most crucial time to be spending huge amounts of money. There's another part of this argument, which is that if you see some of these government programs like the Canadian Emergency Response Benefit, those are actually put in place to avoid other programs being used. So even though we see huge amounts of money going out in one direction, they could actually be limiting money in other directions as well. Right now, it's too early to say what that deficit's going to look like. It depends a lot on whether this economy really can rebound out the other side. And I'm a little bit skeptical it's going to be so easy.
All right, Frances Donald, always great to speak with you. Looking forward to doing it again soon. Frances Donald is a chief economist at Manulife Investment Management. And